Hi guys, Rachana Ranade here and I welcome you all to my next session on bonus shares. Actually, if you have seen my Ask Rachana show episodes, there were many people who were asking me about bonus shares. So I thought of making a completely separate video on bonus shares. I'll tell you what are you going to get in this entire video, what you're going to learn from this entire video. I'm going to talk about the basic concept of what is bonus shares. You will get to know about a company who has actually doubled or tripled or whatever you can say about the investments of shareholders. Multifold times investment of shareholders has increased the value essentially. We'll also talk about a very important point as to how or what could be the different parameters for you to understand which company has a probability of giving bonus shares. Okay, and very important, we are also going to talk about the taxation perspective of bonus shares, right? So without wasting time, let's move on. Bonus shares basically is nothing but free shares given by the company to its shareholders. Okay, bonus is generally given in a ratio. So let's take an example. If company says we are issuing bonus in the ratio of 1:1, what does it mean? They are giving one share free for every one share held. I'll give you one more example. Let us say company declares a bonus of 3:1. Now what does it mean? 3 free shares you will receive for every one share held. So that's a fantastic thing if you can get. So that is the basic concept of bonus shares, wherein the company gives free shares to the investors, to its shareholders. Question is, when need I buy the shares if I were to get the benefit of bonus shares? So it's a very important concept which is known as record date. Okay, this record date is a date which is declared by the company. You should have shares of that specific company in your demat account on this record date. If you have shares on this record date, then and only then are you entitled to get bonus shares. Okay. Is there any big value addition to your investment value if you get bonus shares? Answer is no, not really. Let's take an example. If one share has the current market price of, let us say, 1000 rupees, and if the bonus share is given in the ratio of 1:1, then what will be the new price? New price will be nothing but 500. The reason is very simple. एक के ऊपर एक share free मिल गया, then your value or the price of the share exactly goes down to half. Okay, that's how it works. So what will happen? Let us understand. Assume you had one share of 1000. Now you got one more free share. So this into 2. So what happened? Here also your value of your investment was 1000. In the second case, post bonus also your value remains same. Then why bonus shares? Is it just sentiments that I have got bonus shares, I've got bonus shares? No, let's understand this. Assume that this 1000 rupees share was comparatively high priced stock. So that is why there were many people, many investors who were not wanting to buy that share. So I'll tell you the Indian mentality. It's, if I say that I'm able to buy 20 shares of a stock, dil ko sukoon deta hai. 20 shares of one stock I bought, but I bought only one share. That gives a gloomy factor to any investor. So people generally want to buy low value stocks. Be very careful on this. Just because it is low in price does not mean it's a profitable stock. You have to check all the parameters related to that. But the moment post bonus, if the share price goes down, it becomes affordable. Listen to the word, it becomes affordable to many investors, and that is why what will happen? It's affordable. More and more people would now want to buy shares of that company. Okay, so I'll give you a simple example. Let's say company offers a big bonus of 9 shares for every one share held. I know that's a big one. So earlier you had only one share, now you'll have 10 shares in your portfolio. Okay, now what will happen? Let's say the price originally was 1000, now the new price will be approximately 100. You can imagine such a thing that, let's say Reliance Industries, which was once available at 1000, if now it becomes available at 100 rupees, won't you also want to buy that in large quantities? Yes, and that's what exactly happens. More and more people will buy, more and more demand will be generated. The more and more demand is generated, demand supply forces, the price will ideally rise. So let's understand, theoretically, a 1000 rupee share post 1:1 bonus should have gone down to only 500 rupees. But generally what happens, if the demand increases, then the share price starts maybe at 550, could be at 560, could even rise to 600 levels also, you never know. So that's the biggest advantage of bonus. Okay, so I hope you have understood this very first point. Moving on, is there any company who has given a huge bonus till date? Yes, and the name of that company is Infosys. Now let's understand how bonus impacts the value in your portfolio. Okay, if you know about this, Infosys had come up with an IPO, that is an initial public offer, with 95 rupees per share. If I'm not mistaken, this was way back in 1993. So let's take an example. Assume that your father, your mother could have bought 10 shares only, okay, 10 shares at 95. So what was the initial investment? Initial investment amount was rupees 950, right? Okay, so now what happens? With this 950 initial investment, what happened was Infosys had given bonus how many times? Any idea? Do you know this? 8 times. Bonus has been declared 8 times by Infosys till date. Okay, now let us understand in what ratio they have given bonus shares. So I'll just tell you how it impacts your total number of shares in your demat account. The first bonus was 1:1. So presuming that you had only 10 shares in your account with the first bonus of 1:1. So I'll just quickly take it here. 1, 2, 3, 4, 5, 6, 7, 8 bonuses till date. The very first one was 1:1. So for 10 shares, how much you're going to get? 10 shares. Perfect. So that will be 10 shares plus 10 shares is going to be, your new number of shares are going to be 20. For the next 1:1 bonus, now you will have how many shares? 40 shares. For the next bonus, which was again 1:1, you will get now 40:40, so you will get now 80 shares. Next one, again 1:1, now you will have 160 shares. Next, again 1:1, this fifth one was not in the ratio of 1:1, it was in the ratio of 3:1. Okay, this next fifth bonus was in the ratio of 3:1. So now let us understand what is 3:1. You will get 3 free shares, 3 bonus shares for every 1 share held. That's a bonanza, right? So you had 160 shares. Now how much you are going to get? 16 threes are 48. 480 shares you are going to get. 160 you already have. So you are now going to have a revised count of 640 shares. Wow. Next bonus, again in the ratio of 1:1. It goes to 640 plus 640. Yes, that's 1280. Next, again 1:1. Now your new price is 2560. And the last one being 1:1 goes to 5120. Maddening. It started with 10 shares. And today, if you would have still held on, if you have still clung on to these 10 shares, these 10 shares would have gone up to 5,120 shares. What is the current market price? We also call it as LTP. That is 815, the day on which I am recording this video. It's 815. So now if you check, what will be the price of this? So 815 multiplied by 5120, the value of your Infosys shares would be 41,72,800. If you're feeling that my maths is amazing, I just did the calculation right in front of you, you're wrong. I had done this calculation before. Okay, so 41,72,800 would be the value of your shares with an initial investment of 950. Wow, that's a big one, ain't it? But the next question which starts, bothering our mind is that this is history. This is what the value would have been if your parents would have invested. Right, so let's move on. Now we are on to the next point as to how we can find out certain parameters based on which we can choose that whether there is a probability at least that the company can issue a bonus shares or not. The very first one could be whether the company is in good profits or not. If company is into continuous profits, it's a positive sign. With increasing profits, what increases? Any answer? Yes? Reserves. Reserves are what increase. So if company has good profits, they have good reserves. Question is, what the company will do with the reserves? If you have seen any balance sheet of a company, company discloses this reserves portion under the liability side of the balance sheet. So reserves, say company can have 2-3 options. Number 1, they can give dividend. Number 2, they might use it for expansion. So in this case, if they are going to use it for expansion, company does not pay this money out to the shareholders. This profits that they have reserved, they'll not pay it out to the shareholders. They'll keep it with themselves. And the thought process behind this is that company might say that if we give this money to you, at what rate can you grow this money? 5%, 7%, 8%? But company says we have the capacity to grow this money at the rate of maybe 15%, 20%. So instead of paying it out as a dividend, keep that money with us. we will expand the company, we'll expand the operations, and in turn you will be benefited with the increased share price. Okay, so this could be one more thought process. Big companies like Google, Microsoft, they have barely given any dividend, they have barely given any bonus shares. So their thought process is of expansion. Okay, so you need to know whether the company's thought process allows it to give dividends or not, allows it to give bonus or not. Okay, so let me come back to this question of reserves. Probability number 1, they can issue a dividend. Probability number 2, they can expand. Probability number 3 is they can issue bonus shares. There's one more probability, company can also come up with a buyback. This is what many companies are actually doing in the recent past. I would like to make a totally separate video on what is a buyback. It's a huge discussion and it's a fantastic discussion as well. Okay, so these could be the various parameters based on which you can check if the profits are good enough, there are chances that company might give bonus shares. Reserves are good, there is a probability. Thought process. Now how do you check what is company's thought process? It's very simple. Check the history. Okay, history is nothing but whether company has really given bonuses in the past or not. Assume that company has never given a bonus till date, then the probability that company might give back-to-back bonuses is very less. Okay, so these could be the different parameters you can choose based on which you can try to select stocks which have a higher probability of giving dividends. Of course, when I talked about profits, you can also check what is the product margin. Okay, what do we mean by product margin? If you have seen my video on Reliance Industries, I have mentioned very clearly what were the project margins for each and every product. In that video, I talked about what are the product margins for oil and exploration, what are the product margins for refinery segment, what are the product margins for telecommunications, which is Jio, Reliance Retail. These two product margins, Jio and Reliance Retail, they had a very good profit margin for these two products. So if product margins are high, in turn profitability will increase, in turn reserves will increase, in turn possibility that company will give bonus shares will definitely increase. Okay, that's it about how you can choose stocks which have a possibility or a probability of giving bonus shares. Well, I guess I have almost come up to the 15 minutes mark, which I generally don't exceed for my videos because attention span I feel might go down. So instead of talking about the taxation impact of bonus shares in this very video, I think I should make a separate video on that. So let's split up this video as part 1 and part 2. So I guess I'll stop the video here only. There are some series wherein the wish to watch the second video goes on increasing rapidly. If you have been a GOT fan, the episode typically ends with a cliffhanger where you will always believe that next episode I want to watch that. So if you want to understand the taxation impact, definitely watch my upcoming video, which will only and only focus on taxation impact with practical examples, with long-term capital gain, short-term capital gain, taxation rates, everything all bundled up in the next video. So that's it from my side. Jai Hind. Bye-bye.